We are living in a world that is increasingly online. The advent of the internet has fundamentally changed how human beings interact with the world, both online and off, in immeasurable ways. And really, we are in the nascent stages of this digital paradigm shift. The primary output of this new digital age, one that has transformed the economy as well as how we consume mass media, the primary output is simple. It is data. Terabytes upon terabytes of data. That data, if parsed and coalesced properly, is enormously valuable. One thing is certain since the dawn of humanity. That which has high value, that which is precious in our society, is protected. Those things receive stringent security. Welcome to the Quality Investor. As we move into the new age of mankind, the digital age, the savvy investor must understand how to capitalize on the overall direction of the market, which serves as our proxy for the economy. Investing your money into a newspaper today is akin to investing your money into a horse and buggy at the dawn of the automobile revolution. And honestly, one should discount the opinion of anybody that believes investing in the analog institutions of the past and simply never listen to them again. Think businesses such as the aforementioned newspaper, bookstores, movie theaters, niche video game retailers. All these are relics, museum pieces like a blockbuster videotape box. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. But I digress. If the primary output of the digital age is data, and that data has enormous value, then the securitization of that data is not just important, but an absolute requirement. I am, of course, talking about the cybersecurity industry. And one business within this industry is demonstrating its importance and dominance in the market. Fortinet, ticker FTNT, released an excellent earnings report last week. After a slow start to 2024 for Fortinet, the business has seen accelerated growth the past 2 quarters. The cybersecurity industry is poised for substantial growth in the next few years and decade. And with AI becoming more integrated into the digital fabric, the need for this vital industry will require even more advanced and scalable solutions. And that's what Fortinet provides. Firewalls. The main offering of their product segment protects the network perimeter from unauthorized access. It's like a border wall, but that is the beginning of what Fortinet's value proposition is. Fortinet specializes in the integration of their cybersecurity solutions from hardware all across to the software side of the spectrum. From an investing perspective, this accomplishes a number of things. When choosing to invest in a business, the best businesses have a wide economic moat. Fortinet's intricately integrated security system. Now, I'm not going to go into technical detail. I linked materials describing it below. It creates high barriers to entry. High capital expenditure is required to develop the products and services Fortinet offers and to acquire the expertise to build it. And once a business chooses Fortinet as their cybersecurity solution, Fortinet offers install, training, maintenance, and security consulting services. This is security as a service, and it is a very lucrative, high-margin, subscription-based cash flow stream. The wildly profitable services segment is the fastest growing segment and provides 2 more moat-like qualities. I already mentioned the subscription revenue, which provides reliability and predictability in forecasting, but also in switching costs. Once Fortinet builds and then maintains your cybersecurity network, it becomes prohibitively expensive to suddenly switch to a competitor. These characteristics of the business make it a wonderful compounding business. Aside from Fortinet's favorable position within the cybersecurity market, the market itself is projected to grow at a 10 to 13% CAGR through 2030. This is an incredible rate of growth for the industry. And if Fortinet continues to increase market share, their growth will be even faster than the overall industry. All of this bodes well for investors for a very long time. So while these are all positive aspects for Fortinet, the business, how did they perform in their latest quarter? Are they meeting these lofty investor expectations and delivering tangible, organic growth? And after climbing to over $90 per share, is Fortinet a stock worth buying right now? Last Friday, the day after their earnings, Fortinet closed at a very nice $92.04. That was up 10% on the day. And in pre-market trading here on Monday, they're even up over 0.5%. We'll see if they continue this momentum into the day. Looking at the 5-day chart here, Fortinet was already a beneficiary of the post-election market rally. But after their earnings on Thursday, you can see another massive pop, closing up 17% on the week last week. So what caused that 10% gain we saw in the markets on Friday? For starters, revenue was up 13% year over year, but that service revenue that I was talking about, that was up 19% year over year. Those results came in at $1.51 billion in revenue, which beat analyst expectations of $1.48 billion. But when investors look at Fortinet, what they care about the most is billings. That's a sign of the health of that subscription revenue. And that is growing again. And due to that profitability of that service segment, which by the way has nearly an 88% gross margin, we can see that's driving operating margins growth as well. Record GAAP operating margin of 31.2%. That caused earnings per share to come in at 63 cents, crushing the expectation of 52 cents per share. I've said in the past, there's two things the market loves when they see an earnings report. One is that margin expansion I just mentioned, but the other is raised guidance. And again, Fortinet raised their 2024 revenue and non-GAAP operating margin guidance. That demonstrates to investors a strong outlook on the future, and the investors responded by giving Fortinet a 10% bump on Friday. And looking into the details of this earnings report a little bit, we can see why this was such an outstanding quarter for Fortinet. The product revenue segment, that's been lacking a little bit in 2024, but we're seeing an increase of 1.7% year over year. So they're actually getting back to growth here. They've been shifting a lot to the services segment, using that as their main driver of growth. And they should, it's far more profitable. And on that point, services revenue over $1 billion for the third quarter here, an increase of 19.1% year over year. And a large part of that, that's the billings. When you have subscription-based revenue, you're billing your customers 1 month, 1 year, whatever, in advance. So it's an important metric to keep an eye on when you're looking at these earnings reports for subscription-based businesses. And billings was $1.58 billion for the third quarter of 2024, an increase of 6.1% year over year. Q1, they were down year over year. Q2, they were flat. So they're back into that growth category for billings. Billings is that securitization of that subscription revenue for the future. And ultimately that goes into deferred revenue, which is a liability on the balance sheet, slowly recognizes revenue as the services are provided. And the deferred revenue is now $6.01 billion, which is an increase of 13.7% year over year. So all the metrics to look at for Fortinet are trending in incredibly positive directions. Margin expansion is such an important aspect of any business because that ultimately adds value to a business. Because margin expansion is one of the main creators of wealth. Because increasing margins ultimately flow down to the operating cash flow, and that cash flow is ultimately what gets to the investors' pockets at the end of the day. So if you can expand that margin, expand that operating income, that's just like free money for investors. And they crushed it in this quarter. Operating income was $470.9 million, but the operating margin was 31.2%. That's an incredible margin. A year ago, they're at 22.7%. That's an increase of 850 basis points. Massive. Well, they issued strong guidance for Q4 in 2024. What I really care about is the raised guidance for the fiscal year 2024. Revenue in the range of $5.856 billion to $5.916 billion. Last quarter, it was $5.8 billion to $5.9 billion. So they raised both the bottom end of their guidance as well as the top end of their guidance. Same with their service revenue, the segment that has that incredible operating leverage. They expect service revenue to be in the range of $4.015 billion to $4.05 billion. Compare that to last quarter's expectation of $3.975 billion to $4.025 billion. So again, raising expectations, the market loves it. But what makes this guidance even better, they raised the expectation of the margins. The operating margin, a range of 32.9% to 33.9%. Last quarter, it was 30% to 31.5%. The low end of their margin expectation is 140 basis points better than the high end of their previous expectation. Margin expansion is one of the primary drivers of wealth creation. Looking at how they're tracking for my estimates here, you can see that year one revenue right in line here for my estimation. Operating profit, they're about 4% ahead of what I had expected. And a large part of that is that incredible margin expansion that we're seeing. I'm still assuming about a 29% operating margin for the year when we're all said and done. Net income, about 13% ahead of what I'm expecting. Earnings per share, about 12.5% ahead. But we are lagging a bit behind on free cash flow. I think a part of that is because we're still including that Q4 $165 million of free cash flow, a pretty down year overall for Fortinet. I don't expect to see that again in Q4 2024. So I think we'll probably be right in line here with our free cash flow estimation at about $1.7 billion. And this quarter, they brought in $572 million in free cash flow, a very healthy margin of 37.9% over the prior year's margin here of 36%. Everything is growing in the right direction. And on that point, like I said, about a 29% operating margin estimate. They have excellent debt management and only have a 1.35% interest expense margin. Income taxes at about 15% expectation for this year. $1.20 in free cash flow conversion. Fortinet is actually one of the best businesses in converting net income into free cash flow. They do it at a rate of $1.20 for every dollar of net income. And ultimately about a 1% share repurchase on the year. They did announce a share repurchase program. They increased the authorization by $1 billion. So now there's about $2 billion remaining in Fortinet's share buyback program. You can see the past 5 years, it's been incredible revenue growth for Fortinet, 24% 5-year CAGR. I believe that the service revenue, that's going to really drive the business going forward. I'm expecting on a base case 12.75% service revenue growth over the next 10 years and about 6.5% growth annually over the next 10 years for the product revenue, driving about a 10.8% growth rate in revenue on the base case. For the bull case, however, I expect their revenue to grow at about a 12.6%. Again, driven by that service revenue. But the important aspect here is it's a lot slower growth than what we've seen in the last 5 years. The bull case is half of what they grew in the last 5 years. And if you remember what I said earlier, the overall market for cybersecurity is expected to grow about 10 to 13%. So I'm actually right within that range. And that wasn't on purpose, by the way. It's very likely that Fortinet could easily beat these expectations because they're growing their market share. I linked the earnings presentation below so you can see how they're handling their competitors. On the base case, I have a 33% operating margin by year 10, 34% operating margin for the bull case, 32% on the bear case. And given the estimates from up here, ultimately that translates into a free cash flow margin on the base case of 37.4%, which I think is easily achievable if they continue to grow that service revenue at the rate they're growing at and expanding that margin. On a bull case, nearly 40% free cash flow margin, and on the bear case at a 35% free cash flow margin. Closing out at $92.04 on Friday, we now have a PE ratio of 46.5 for Fortinet, still quite below their 5 and 10-year average here. And based on my DCFs here, I have $81.05 for the bear case, $99.59 on the base case, and $120.78 on the bull case. My exit multiple comes in at $98.41. These are based on comps with Palantir, Palo Alto Networks, CrowdStrike, VMware, and Qualys. And you can see if they hit that upside, that bull case, they have a nice 22% runway of growth here. And without any margin of safety, their buy price right now is at $99.61, or forward PE of 53.8. With a 20% margin of safety, which is generally the margin of safety I use when I buy Fortinet, it's at $79.68, or a forward PE of 43. It's certainly possible to watch Fortinet climb up a little bit and then fall back down mid-quarter. Investors seem to get excited about Fortinet whenever they release a strong earnings report. That excitement wanes throughout the quarter. They fall back into a very buyable price range. But who knows? They may take off now. I think we're in for an interesting market rally here the rest of the year. So this earnings report pushed their market cap above $70 billion. They have an incredible ROIC, 122.8% on a trailing 12 basis. Incredible 5-year average of 74.4%. This is a very capital light business and an incredibly high margin business. And that is reflected beautifully here in the ROIC. And you can see that in the margins as well. 78% gross margin, almost 80%. These margins are only going to expand because the service revenue is such a high margin business. And that's where the fast growth is for Fortinet. So the margins are only going to get better as the years go by. A very good future ahead for Fortinet. I would like to see the price come down a little bit more to feel comfortable buying in again. But Fortinet has been performing wonderfully since I first bought them a little bit over a year ago in the $55 to $60 range. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.